We'll start with number one, which is maintain liquidity. What does that mean?
Maintaining liquidity is important. Having money accessible in bank accounts, savings accounts, even like a mature limited pay whole life insurance policy is a smart thing to have. It's not always about getting a rate of return, and it's important to have this money available in case you need it, maybe within the next 6 months or so. So it's important to have that money put aside for anything that may pop up unexpectedly.
Which, COVID-19 was something that certainly popped up unexpectedly for a lot of us.
Yes, absolutely. That was one thing that really took a lot of people and also a lot of businesses by surprise. So it's important to really maintain, your liquidity to cover various expenses that may pop up.
Number two on your list is protect against inflation. How does one do that?
Yeah, right now, inflation is happening in front of everybody, and CDs, savings accounts, bank accounts really aren't keeping up with inflation. So it's important to really look at things that you can do today to make sure that the dollar isn't really just disappearing in the bank account. So you can do certain things to make sure that you have strategies in place, and make sure you're being careful of anything that's super risky, because a lot of people that are facing retirement, they're thinking, okay, I need to keep up with inflation. What are the things that I need to do? So they need just to be mindful of the fact that they may incur potential, risk.
You say there are certain things you can do. What are some of the biggest you can do?
There's a lot of strategies that you can implement when you actually are doing retirement planning, especially if you're now either looking at retirement or thinking about retirement. There's strategies like the buffer income strategy, which will help people look at withdrawal rates that are a higher rate of return that will equate to a higher lifestyle. So there's things that people can put in place today that are real super important to make sure that when they get into retirement, they have various strategies and things in place to help them through retirement and make sure they have a comfortable life.
Which kind of plays into number three here, which is diffuse the tax bomb and protect against increases in taxes, both state and federal. What should people be looking at here?
Well, right now, if people have a lot of pre-tax investments, like IRAs, 401ks, it's super important to look at the possibility of maybe doing Roth conversions. Again, this will eliminate any potential taxes later on. Also, you want to make sure that you have things in place, because if you wait until you're 72 and required minimum distributions happen at that point in time, it can be really problematic. So it's really better to be proactive with your approach and looking at, okay, what's my plan look like right now? And what are the things that are going to happen in the future? So RMD planning is also essential.
You also suggest protecting against market risk. How can you protect against market risk?
Well, again, if you look at various strategies that you can implement, a buffered strategy where you can use assets that are just not always in the markets. I know we're in a very low interest rate environment, so this can be a little bit challenging for people, but it's essential to have things in place so that when you're looking at strategies, whether it's a retirement income plan, you can also look at things that are maybe not tied to the markets that are going to get a respectable rate of return. There are various index products that will offer that ability for people to kind of create that buffered strategy between assets that are in the markets and maybe using some type of a product that's based on an index.
I know you can't get too technical, but are there certain products that we should be looking into when you say there are some products out there?
Yeah, I mean, again, everybody's going to be a little bit different depending on where you are. If you're thinking about retirement, I would recommend sitting down with a professional to explore different options. If you are actually in retirement, a lot of people are looking at, in addition to any assets invested, they're looking at various fixed indexed products that allow them to put money in. They offer some protection so that they don't have that market volatility, and also gives them a little bit of peace of mind.
Number 5 on your list is investment plan versus retirement income plan. Kind of explain the difference there.
That's a biggie, because a lot of people will have money saved up in a plan. They have an IRA or maybe a 401k. And having that is an investment, right? An investment account, but it's not an actual plan. It's not a retirement income plan. So the differences between the two is, one is looking at just a portfolio, and the other is really like, what is it going to translate into actually retirement income? What is it going to look like when you're in retirement? And that ultimately will translate into the lifestyle that you're creating, so that when you now are looking at maybe the next 10, 20, 25, 30 years, you're looking at a sound retirement income plan that's written, as opposed to just having an investment portfolio.